AST SpaceMobile has announced an agreement to acquire global S-band spectrum priority rights held under the International Telecommunication Union, ITU. This is a big deal because AST is building the first and only space-based cellular broadband network that can be accessed directly by everyday smartphones. The network is designed for both commercial and government applications. According to Abel Avelin, Chairman and CEO of AST SpaceMobile, the company's revolutionary satellites and proprietary application-specific integrated circuits, ASICs, were designed with S-band capabilities in mind. With these new spectrum priority rights, AST SpaceMobile will be in a position to bring services in S-band to targeted markets around the world. This acquisition complements the company's existing Global 3 GPP spectrum strategy and planned L-band spectrum strategy in the US and Canada. As a result, AST SpaceMobile would be capable of expanding subscriber capacity by offering the vast majority of countries around the world the full AST SpaceMobile network capabilities. This would enable a true broadband experience directly from space to everyday smartphones, with a goal of peak data transmission speeds of up to 120 megabits per second. The company plans to achieve this in conjunction with its mobile network operator partners. The details of the agreement, entered into on August 5th, involve AST SpaceMobile acquiring an entity that holds certain S-band ITU priority rights to mobile satellite services, MSS frequencies, in the range of 1,980 to 2,010 MHz and 2,170 to 2,200 MHz for use in low Earth orbit. These spectrum priority rights will provide AST SpaceMobile a path to offer services in these spectrum bands around the world, subject to country-level regulatory approvals. This acquisition supplements the company's core Global 3 GPP cellular spectrum strategy. The total consideration for the transaction is $64.5 million, which can be paid in stock or cash at the company's election. This includes $26 million to be paid at closing and deferred consideration of $38.5 million, with a portion of the deferred amount subject to achievement of performance-based milestones. The transaction is expected to close during the second half of 2025, contingent upon the satisfaction of customary closing conditions.